For decades, a president's annual financial disclosure was a fairly light read. Barack Obama's final form came in at 8 pages. Joe Biden's was 11. This visual comparison shows the sheer volume of the disclosure from the first year of Donald Trump's second term. It spans 927 pages. And at the top of that ledger sits a staggering top-line figure, over $1.4 billion in personal earnings in a single year. Historically, commanders-in-chief have utilized a blind trust. They hand their assets over to an independent manager, severing their personal wealth from the daily decisions of the Oval Office to prevent conflicts of interest. Trump opted out of that system. He kept his vast portfolio of real estate and branding ventures intact, explaining that third-party financial institutions manage the day-to-day trades using automated technology. When you read through those nearly 1,000 pages, the most compelling detail is how closely those private financial gains mirror the specific public policies executed inside his administration. The largest slice of that $1.4 billion income came from a massive windfall in cryptocurrency. $635 million of it was generated entirely through a licensing agreement. A group called Celebration Coins paid for the rights to mint meme tokens bearing his name. Another substantial portion is tied to the Trump family's own crypto venture, World Liberty Financial. Between token sales, equity, and wallet income, that enterprise brought in over $355 million. This private digital boom occurred exactly as the White House launched an aggressive public agenda to position the United States as the crypto capital. The administration delivered, signing executive actions and throwing the weight of the presidency behind legislation like the Genius Act to drastically loosen crypto regulations. The federal government actively worked to create a favorable market environment for digital assets. At the exact same moment, the president's own licensed tokens were introduced to that market. This pattern extends from digital tokens to physical, brick-and-mortar infrastructure. The GEO Group is a massive private prison company, and they operate as one of the largest contractors for federal immigration enforcement. This timeline tracks the president's trading activity, starting 10 days after inauguration. Over the next months, the ICE detainee population surged to nearly 70,000. In exact tandem with that growth, GEO stock purchases spiked, with individual buys reaching $445,000. Representatives for the Trump business firm maintain that these investments are handled entirely by automated algorithms. The mechanics might be out of his hands, but the outcome is a personal portfolio directly enriched by federal directives. The ledger also documents revenue streams from legal and media battles, listing $80 million in income derived from lawsuit settlements with tech and broadcasting giants, including giants like Meta, the platform YouTube, and broadcasters CBS and ABC. These settlement proceeds were routed straight into the Donald J. Trump Presidential Library Foundation. The financial footprint includes the broader family. First Lady Melania Trump earned over $10 million by licensing her image for a documentary. When questioned about these sprawling financial ties, the White House issues a firm denial of any conflicts of interest. They point to the lengthy document itself as proof of an unmatched commitment to transparency. The scale of these intertwined relationships creates an environment where the business of the first family and the business of the state are inextricably linked.